Now, sticking with results, Zeda's reported a 17% rise in annual headline earnings per share, and that was largely driven by strong growth in the dynamic car rentals and leasing market. Business Lunch hosted Zeda's CEO Ramasela Ganda and unpacked that performance in more detail.
Very excited, especially not just because it's the first year of listing, but operating in a very tough trading environment. With interest rate, there's been a lot of concern about Zeda's debt and whether we'll be able to service it. And as you say, all metrics are up, even HEPS, our earnings per share is up despite the high interest rate that we've paid in. So our activity level were exceptional this year when you look at what you've just said, our car rental and leasing business. And this is achieved with a very tough used car market that is going through a downturn, with disposable income being under challenge. But I think our dedication and focus on our strategy, driven by this usership economy, has been, the biggest win of the day for us.
I think a big standout for me, Ramasela, is indeed your ability to, return some value to shareholders above your cost of capital. Let's speak about managing a finance cost over this period. It hasn't been easy, as you say.
No, not at all. When we did our weighted average cost of capital immediately as we been unbundled, it was looking something better when 8% and interest rate hit during the year. And I remember when we were revising it and we thought, what kind of return on invested capital will we be able to deliver? Mm-hmm. And at some point, looking at all the activity that we're doing, we thought, if we can just deliver 14%, but to deliver 18.7%, it's continuously what the business does, looking at opportunity. Even our car sales business has never even hit or beaten like the rest of the industry. We have a good product, which is a big plus of the Avis car. We've got a good product, we've got very experienced team and very dedicated team that even with tough environment, we're able, to cushion ourselves against some of these challenges.
What is also interesting is how, you still expanded the fleet over this period. So let's talk about optimizing assets in a time when, like we were saying, that costs are super, super high, but fleets need to be up to standard for consumers to see value.
No, definitely. And one thing that we pride ourselves is safety, that we will continuously give a good quality car. And we also sell a one-year-old car that is good as new. So that becomes very critical, that we do not compromise on our standard, but key that, we do not just chase market share, we chase profitable business. And that has been key. If that means diversifying from where everybody else is playing to make sure you've got a proper mobility supplier for your customer. That's what Avis and Zeda has always been about, that we deliver in the time to our customer at the right value, but first and foremost, the quality of our vehicle and the staff. And if you look at our drivers as well, we put a lot of investment to deliver good service.
So let's talk about the used car market. At some point, inflation in this market was actually running ahead of new vehicle sales, but we have seen a bit of a normalization there. But let's talk about the supply and demand dynamics that are making up this sector. We've seen the likes of NAMSA, for instance, come out and really flag this specific part of the market.
Used car, with the new vehicle sale, we did expect that the used car will be going through, as you say, normalizing, but actually it has been very quick. And we saw what is happening in the new car market. But what became very clear to us was because Zeda does not sell just any used car, we sell our own used car. We buy it right, we maintain it right, so we're able to still get the better margin. And we've seen it with wholesale, because most traders will still then, when things are really bad and they're only going for, critical and good quality stock, they come to the Zeda stock. So that has been our biggest advantage, that, we get in the right customer that buys. But no doubt, it has been the toughest in this period, the slowest with regard to car sales that we've seen. And the margin decline has been, we've seen 5% decline in margin. So it has been a significant hit in this industry.
You also saw this year, Ramasela, you delivered your first ever EV truck for a last mile customer. I know Zeda is very big on issues of usage and costs. Let's speak about this one, and what it tells us about the direction of the logistics sector.
Look, when you look at our strategy, and now I've really unveiled today that our board approved our ESG strategy, which is really looking at responsibly driving the way to a sustainable future. We cannot do that by leaving something as heavy as truck outside the environment. You know, we're working with OEMs to make sure that we've got charging station to improve on that. And, you know, I know most people worry about the load shedding. And if you manage things properly in South Africa, a lot can be achieved.
And then I'm keen actually just to hear about iLease. I mean, I think I would have spoken to one of the executives from Zeda a few months back when we're launching iLease. Let's talk about the receptive of this product. And if this is really proving that investment case that you initially had, Ramasela, that the way in which we use our vehicles is changing. It is slow, but it's certain.
It is slow, but we know that somebody needs to lead and really give this product. We understand that it's about total cost of usership. You know, we leave Notando under the disguise that we owning cars, but we've got this big residual value at the end, the big balloon that comes, and we believe that we own it. We get the car, and it's 72. Your cash flow looks like this, but it's never your car. You still have to go and look for insurance. You still need to fix your tires. This is a comprehensive deal with one payment where you get everything. But more importantly, it is to your mobility requirement. As and when you need it, on the terms that you need it, we are advising. I mean, we launched this early in October, and where we are sitting now, just under 100, you know, people have been approved on this. And our approval is still as rigor as any other process that we go in. So we're very excited. But one thing we've noticed, there's a lot of education that we still need to do in our region to make sure that people understand. You know, you get comments saying, at the end of the period, I won't own a car. And I'm like thinking, I'm not sure who really owns a car in our country, unless if it's a really, really old 2013 car.
Now, I must ask you just to look ahead for us and look at maybe the growth trajectory as well for Zeda, Ramasela. The macros are expected to improve slightly in the latter part of 2024, but how are you gauging the future?
Look, we still believe interest rate is going to be a challenge for us for a while, and that will still put pressure. The new vehicle, I mean, we still look at the stock of the new vehicle. We believe that will still put pressure on the used car industry. So those are the biggest two that we really believe. On the positive side, we believe that our country is still a good destiny, you know, for tourism. And also internally, we believe that our, you know, South Africans are even under a lot of pressure. There's still trouble. So we still see that a lot. And when we look at the usership, we see a lot of people working on projects and not long-term work. We see a subscription product looking very good in that space that we don't see a lot. I mean, in 2024, in almost all the region we operate in, is an election year. And all that it says is that people are going to crisscross the world. And when they crisscross the world, they need mobility. That's all that I can say.
That was Zeda CEO Ramasela Ganda.